Hi guys, welcome back to the channel. Hope everybody's doing good. We're going to be going over my January 2022 stock portfolio performance and to see how we're sitting just now, but there's a few other additional things I want to tick off in this video as well, going over my thoughts on the January 2022 crash that we've been through, just to give a little bit of perspective on how I've navigated this. But of course the main video will be going over the portfolio value. We're going through these agenda points here: portfolio allocation, dividends, what I've been buying and selling, and as well as we're going to get a full portfolio review at the very end. So first things first, the January 2022 crash, it's been given a lot of headlines, and I just think in these moments of turbulence we need to have a real bit of perspective. The main things that I've got from this is that when you look at these headlines to the right hand side, US stock markets endure the worst January since the global financial crisis. S&P ends month down 5.3%. Nasdaq narrowly misses the worst January ever. This is a bit of a side topic here, but we've got popular YouTubers who are liquidating their positions in the stock market and a bit of crypto. And I've circled this because this is only 1 month. We're talking about 30 to 31 days here in period of time. Now, we can look back over the course of when the stock market came into inception, and it's been a great wealth builder. We know that as a fact. And people this month, into January, into February, are complaining this market isn't normal. Stocks are getting hammered. But when last year we had one of the biggest, well, probably the biggest return ever, and people were classing that as normal, nobody was really up in the air about it. And I just want to give perspective. I'm not a financial advisor, I'm just a regular guy trying to pursue wealth through the stock market, and I think you just need to have a bit of perspective on looking at this chart. Look where we went from the COVID lows to the tops previously. That isn't normal in comparison to any other period in time. So the way that I personally navigate these downturns is through having my watch list. I'm someone who looks through individual stocks, looking to set my price targets on when I'm looking to initiate positions, or if I've got existing positions, I'll look to deploy additional capital should they get to a share price that I feel is good value. For me, these stock crashes or cool-off periods, they're perfect. I like to buy at the reduced times. I like to buy on the way down as opposed to the way up. Be patient, be calm, don't make irrational decisions, and if the stock market goes down 10, 20, 30%, that's an external factor that we can't affect as investors, and sometimes you just need to go along and enjoy the ride as best as you can. And the way that I look at this is good times never last and bad times pass as well, so it's constantly going to be an up and down cycle. So now we'll start to kick off into the facts and figures. I've got on here this overall portfolio value just divided into quarters based on the Hargreaves Lansdown quarterly reports that can get issued to my email address, and therefore I've just inserted this via the different colour codes, and you can see there over time the portfolio has went on the correct directions. There might be a little pockets in time where the portfolios went down or it's been stagnant, but over a long period of time, over the last few years, it's went up into the right hand side. This is how I'm currently sitting asset wise. If you've been a follower of the channel for the last few months, if you've been noticing that I've been moving into more UK shares. I did say I wanted to build this up to about 35%, as I'm quite overweight in international shares, and to be honest I would probably like to get it up a little bit more, up to close about 40%. I've got the equity sector allocation down the bottom left hand side. You can see that I'm more heavily weighted towards technology, consumer staples, healthcare, financials, and you can see the rest of the different ones there. Down by market cap on the right hand side, nearly 50% of the stocks that I own have a market cap greater than 50 billion, so they're large companies, the majority of them, but of course I do have a bit of diversification in there through sectors and through market cap, through a risk versus reward basis. January 2022 has finished off with £224.35 in dividend payments, and I've got on the screen here what made up that total amount. And I've also got on the right hand side the comparison to 2021. This year it is slightly down due to liquidating some of the stocks that it had in 2021 and also some new additions in there. So the payments that came through this month, I had Merck with £15.40, Altria came in with a great one of £43.33, GlaxoSmithKline with £27.93, Medical Properties Trust £26.54, Micron £2.65, Ventus £18.32, Iomart with the first payment I've got from them at £36, and New Residential with the best one of the month with £54.04. And you can see there in comparison to what stocks I've previously had in the portfolio this time last year. I really enjoy looking through this dividend chart here, which shows the various payments received through the various years and months, and it paints a picture that the snowball effect is well underway. With this month I've got £224, which is slightly down based on the liquidation of positions last year, but overall this year I would expect that it's going to be the best year, there's no doubt about it, I'm looking forward to projecting. I would estimate that I'm hopefully going to be about £2,300 to £2,500 in total dividends. We'll see how that pans out across the full year. But this one, yep, I really like it. It's a powerful indicator of the possibilities of being invested over a longer period of time. And you look at the months there, like I said, September and November, December, the continuous months, they kind of paint a true representation of what's going to be expected up over time. But in comparison, you might look at the month like August, which has been going down the way. But overall, each of these years has been progressive, although the payments may be varied throughout the course of the year. Total dividend income received from 2018 up to now is £4,663.23, and it's made up with the number totals on the screen here just now. So what buys and sells have I got in the portfolio? Well, I said we had the January 2022 crash, shall we say, but it's just been business as usual for me. I've been buying stocks and selling a couple. So I picked up SoFi, added into the position due to the recessed share price. I thought it offered good value during this time of turbulence. I did sell Lockheed Martin for a small profit, which we'll look into at the moment. And I did buy Polar Capital Holdings, are an investing company who offer a bit of growth and quite a strong dividend yield at over 6% at the time of buying. Into the sale of Lockheed Martin, I can show you that I've bought this on 2 occasions. I picked up 4 shares and 7 shares. So the first ones that I picked up was 7 shares back in the 2nd of February. So about this time last year almost, got £1,700 worth. And then later on throughout the year, I added another £1,000, giving a total value of giving a total value of £2,700 odd pounds. And I did sell this with a value of £2,985 at the time, and we've also got the dividends income received over the last year. So the way the figures work out, we've got capital appreciation of £236, dividends of £52.60, and the total gains come in at £289.15, which is about 10.5% based on the positions. Why I've sold this? Ultimately, I've got decent exposure to defensive stocks. I've got BAE Systems in the portfolio, as well as Raytheon. And these were the dollar amounts or the pound amounts that I picked up the shares. SoFi, I picked up 82 shares at a price of $14.34, which gives me about £50 worth. And then I picked up Polar Capitals, giving me 383 shares worth about £2,500. And saving the best till last, we'll take a look inside the portfolio and see what stocks I've got within the portfolio and how I'm sitting as of right now. So as we speak, we've got a total value of £88,250, we'll say, with a cash balance of £4,710. We're still sitting right now on about 5% cash. These are the individual stocks within the portfolio, so we'll just start to scan through these. Airbnb, down 4%. Alibaba, down quite large. I've been buying this quite aggressively. I don't know if I'm going to buy any more rather than just sitting my hands on this one. I've got Alkaline Water, a small cap company, up 10%. Altawave IP Group, UK based semiconductor, small cap company again, but a bit with promising revenue growth on it. That's down quite big at the moment. Altria, we know what Altria do. There's a large tobacco company, nice juicy dividend payments, it's currently up 20% on that. Then we've got Amgen, up 10%, Apple, nearly 40%, BAE Systems, and that goes back to why I liquidated Lockheed, is I've still got good exposure to defensive companies. Then we've got Boohoo, down 13%, BP is making a bit of a comeback, up 12%, British American Tobacco, up 16%, Canopy Growth, I picked this up literally within the first 2 months of investing, which was a huge mistake. I need to work out what I'm going to be doing with this going forward, if this is just going to stay here or if I'm going to just admit defeat on this and take the losses. Citigroup, picked this up about 2 months ago, up 7%. Coupang, down 23%, Darktrace down 20%, Energy Transfer, picked this up before COVID started at the wrong price, I guess, and for whatever reason, Hargreaves Lansdown don't let me average back into this, as this stock doesn't meet the ISA criteria, which is a real shame, as I would love to pick up some more of this. GAN down 55%, currently with a loss of £2,200, which isn't great. GlaxoSmithKline up 10%. We've got Goodbody Health. This is a UK based cannabis company. It doesn't show the share price, but this is down heavy as well, as I did get absorbed in the hype train at the time. Greencore is a UK based food company, down 4%, so nothing major. Iomar up 6%. Medical Properties Trust 15%. Merck 11%. Micron up 12%. Money Supermarket down 20%. New Residential, hefty yield on this, close to 10%. Up about 2% on that position. Organon, Palantir 42% down. Pfizer, real good performer in the portfolio, decent dividend on it, and we're up £1,000 or nearly 60%. Polar Capital, the new holding this month, down 3%. Raytheon Technologies up 36, £630, and we've got Shell making a comeback as well as oil is rebounding quite nicely, up 6%, with SoFi still down 23%. Superdry, a real poor performer, again picked us up without the knowledge of where the company was going to be going forward, so I need to work out what I'm going to do with this one, if this is still going to stay here for a while, or as with Canopy, am I going to just admit defeat and look to deploy any cash into these better companies. Tattoo Chef down 22%, Ventus Healthcare REIT down 14%, Vodafone also making a bit of a comeback, get a nice dividend on that, which will be coming out next month, really looking forward to that one, down 6%, and then finally we have Walgreens Boots Alliance. So I'm not saying this is the perfect portfolio, as we're down 10%, but this is to roll out this information, it's just to, it's data points I can look back in time on what was happening. And also I think I'm probably a bit over diversified in regards to companies, but there has been a real pillar here of support from some of the value companies in comparison to the more speculative companies that I've got in here. So overall, this is how we're sitting. And so without further ado, we'll end the video here, and as promised, we'll do this next month and for the rest of the year and see how we're performing. So thanks again guys, cheers, and I'll catch you in the next video.